What's up YouTube, it's your boy OMG Pips. The voice you're hearing right now is post-production of this video. I just don't know what happened, but it turns out the time I was recording my screen, my mic was not connected, so I'm really sorry for that, but I'll try my best to recite my thought process. Make sure you stay to the end of the video to watch my weekly forecast for EurUsd. And so we're going to the weekly time frame. That is where I start my analysis from. I firstly start from the weekly, then work my way down to the lower time frame, so that way I have a clear picture of what the price is telling. I'm marking a swing low, and next I'll be marking the swing high, the most recent prominent swing high. So this is my range. This is what I focus on for now. I don't care about the price action before this swing low right here and the swing high that I just marked. But then I mark BOS meaning break of structure. So I'm just outlining how price broke market structure, which is telling me that it is most likely to continue crashing, going to the downside. And this means that I need to find an entry point where I could short from, right? In the meantime, within this range, that is an extended bias, but like in this video I'm just looking at the forecast for the coming week. I just marked an order block, that bearish candle right there, the open of the bearish candle, that's the order block. That is where I base my order blocks from. Some people do it at the high of the week or low of the week, like the candlestick wick, but I like to use the open. That is what I use as my order block. These three levels that I just marked below are potential areas for price to find support and expand higher. These three levels are a good bet for me to find support before moving higher. So right there I marked my order block. You see I'm using the open as well there. I'm using the open, and then I'm marking fair value gap. So these two areas, the fair value gap and the order block, are areas I expect price to find resistance before crashing lower to the three levels I marked earlier, right? So the FVG and the bullish or the bearish order block, that bullish closed candle, that's the order block. From the weekly time frame of mark, I know what I'm looking for. I'm looking for price to come back into the FVG or the order block. So meaning next week I'm looking for bullish momentum, because I'm expecting the candle for next week to close higher, to at least fill that fair value gap, or if it decides to expand higher, I expect it to reach the order block, but at least the FVG before crashing down. So I'm expecting a little bit of bullish momentum from like Monday to, it could be just Monday and then it crashes, or it could go from Monday, Tuesday, Wednesday, all the way up to Friday, because we never know, right? Okay, we go down to the daily time frame. We see price a little bit clearer here on this time frame. Let's see. Okay, that's the order block. Weekly OB meaning weekly order block, don't get it confused. That's the order block, weekly order block. So you see how I marked the first one and the second one. What's common between them? Tell me in the comments. So we come back down to the daily time frame, and we can see that we have that fair value gap that's engulfing the weekly order block. I mark break of structure, then I mark the fair value gap. Right, the low of that candle and the high of that candle. In between that, the space is the fair value gap. Cool. We can see price rejecting the zone. It rejected the fair value gap. It didn't close within the fair value gap. Only the wicks went through, meaning it doesn't want to be in that area. It wants to go higher. That is what I take from that. And okay, so I'm expecting price to go higher, right? That is what I'm saying there. I marked the break of structure, then that's the fair value gap. I marked the fair value gap. I expect price to move up to that fair value gap area, because we have a weekly order block there, and we have an unfilled fair value gap, which is a magnet for price. Alright, so go down to the 4 hour. and on the 4 hour I mark a break of structure. As you can see, the break of structure left the breaker block that's within the daily fair value gap, or the weekly rather. If you don't know about breaker blocks, you can head down to my Telegram channel, join, check out the content there. If you like it, you can join the group. If you don't, it is what it is. But yeah, breaker block expanded a little bit because I don't know if y'all niggas see for real. So I'm expecting price to move at least to that breaker block area. If not that breaker block area, then within somewhere before the fair value gap. That is a TP for me, a target profit, right? So if we go down, if we go back to the daily, you can see, okay, going to the 4 hour, and we have a break of market structure right there. Basically guys, break of market structure just tells us that price is about to move in that direction that it broke out to. So in this case, it broke out to the upside, meaning we're more likely to see price action expanding to the upside in the coming week, right? So if we measure that lower week, it seems I'm setting up the the gun box. So I'm trying to show you guys the consequent encroachment. The consequent encroachment. How do you say that? Encroachment. Consequent encroachment. The consequent encroachment is at the 50% level of that gun box. That's 0.5. That is the only level, and 25 actually, the 0.25 and the 0.75. Okay, 0.25, 0.50, 0.75. Those are the levels I'm interested in, right? So let's see if we reach the 50 level, and I don't think we reached the 50 level. We reached somewhere near it, close to it actually, but it didn't really touch it. So the 25 is still okay. The 25 is still chill. We can accept the 25, right? So yeah, it did go somewhere close, very close to the 0.50, but it didn't touch it, which is still okay, given we have already smashed to the 25. So we're ready to go higher. At that point, we don't really care about the price action before that swing low, that recent swing low. We don't care about the price action before that. We only care about that recent swing low and all the other stuff that's about to come. So we have that break of market structure right there, break of structure to the upside, right? We have that order block right there, just to mark like everything, just to be precise type shit. So I'm just saying we don't care about that price action before that. We care about the recent price action, because that's what's recent, that's what we're going off of, right? As you can see, that's the break of structure right there. But before it broke structure, the fair value gap it left behind was already filled, so I don't think that's relevant anymore. It filled the fair value gap before breaking the market structure actually. So instead we use that inverse fair value gap as our entry point, because we're on the 1 hour. If I was looking at this, like, okay, I'm looking at that level as my entry area. That's the most interesting area for me to go higher, and within that inverse fair value gap we have that order block right there. So we use that swing low for our stop loss placement, right? Boom, we Gucci. Then we set our TP, which is the first TP is 4.6%. 4.6% on the first TP, right? I'm just putting my label there because niggas be stealing type shit. But yeah, man, that's what it looked like. I'm gonna just save that real quick, and my second TP is right there on the breaker block. Buy entry on that level to that level. That's what I'm looking for. That's what I'm looking at for the coming week, right? The week starting on the 22nd, if I'm not wrong, or on the 21st. 21st is Sunday actually. 21st of April, Sunday. But anyway, man, we're out.